Should the U.S. be bailing out billionaires? The CEO of Social Capital says no. And this tweet on CNBC is very interesting. We'll put a link in there to it. The U.S. shouldn't be bailing out billionaires and hedge funds during this pandemic. And basically what he's talking about is all of the big corporations that are getting the bailout currency. Most of those corporations, the stock is not owned by the employees and small investors. The vast majority of the stock is owned by big funds, family offices, billionaires. They're the ones who own the stock. And so the currency that the Fed is creating, that we all end up paying for, basically. So all of the bailouts, this is not the Fed bailing them out. This is not the government bailing them out. This is you and me bailing out all of these companies. So the airlines, the cruise lines, all of these big, huge billion-dollar firms, we are going to be bailing them out, you and I, with the dilution of our currency supply. Purchasing power doesn't just come from nowhere. You can't type it into existence. Now, it sounds brutal. You think that, well, if we don't bail out the airlines, all these employees will lose their job. No, they won't. He points out in here that when you go through bankruptcy proceedings, the assets are eliminated, the assets are liquidated, not eliminated. And when they're liquidated, another company buys them and the company gets restructured and it becomes very efficient after going through a bankruptcy. The new company that grows out of that is very efficient. It needs all of those employees. A few of them, when it's trying to make the company more efficient, it may do some cutbacks. But on the whole, what you're going to have is healthy companies that will grow. When you bail all of them out, Japan did this in the late 80s, early 90s, and all the way through the 90s, 2000s, and 2010. They continue to do it. And what they created was a zombified economy. They created the zombie banks. It means walking dead. These are dead organizations, and their economy has been terrible for 30 years. During that whole period of time, they had us to sell to while we were going through these big booms, like the tech boom of the late 90s, like the real estate boom of the mid-2000s, and like the almost everything bubble boom that is ending right now. During that whole period of time, that 30 years of a zombified economy, we were buying stuff from Sony and Panasonic and JVC and on and on and on, Toyotas and Hondas and Nissans. So they had us to sell to. To whom do we sell in this upcoming depression? And that it will be a depression and it'll last decades if they bail everybody out. If you allow the companies that took on too much debt and too much risk to go under and allow the companies that survive, which are the ones that didn't take the extraordinary risks, and so they get rewarded for running things correctly. If you bail everybody out, you're rewarding the people that ran things incorrectly, and it's part of the problem. And believe me, this crash would have happened anyway. It probably wouldn't have happened until after the elections or later in this year. Coronavirus has sped everything up, and it's going to make it much deeper. But the crash would have happened anyway. It's just the second half of the 2008 global financial crisis that they did not allow to clear. Going to my news page at goldsilver.com, the price of gold and silver IOUs has risen, so the price of real gold and silver has also risen. Silver outperformed gold just slightly, so the gold-silver ratio has fallen just a little bit. But some of the stories: Fed is seizing control of the entire U.S. bond market. We covered that a couple of days ago. Our world is forever changed. Bretton Woods is now on a ventilator. Well, got news for you. Bretton Woods ended August 15th of 1971. We're on the global dollar standard. There is no Bretton Woods. But what the Bretton Woods system did for the United States, that is going away right now. We'll get to that later on when I talk about the nails in the coffin of the global dollar standard. The Fed and the Treasury have now merged. That's important. The IMF sees world in worst recession since the Great Depression. I got news for you, IMF. It's going to be the greatest depression. That's what we're coming up to. Fed Chair Powell says U.S. economy deteriorating with alarming speed. You know what? I'll go ahead and say it. No shit, Sherlock. How can you expect it not to deteriorate with alarming speed when you close it? But I want to draw your attention to this last story. These are all stories that everybody should be reading. But this last one, deflation, the excess of credit. And in here, Hamilton Bolton did a study of all the depressions he could identify from 1830 on and published his conclusions in 1957. And the basis of it was that all depressions were set off by a deflation of excess credit. So it's a buildup of excess credit in the economy. He also said that sometimes the bubble can go on for years, but there's some event that comes along and bursts that bubble, and then you have this huge deflation that causes a depression. And that's what we're going into. And even though the Fed is going to be doubling, tripling, quadrupling the currency supply in just a few short years here, the Fed and the Treasury now, because they've sort of merged, even though that's happening, velocity of currency is going to continue to slow. People will hoard that currency because they're still scared. And you have to watch episodes 6 and 7 of The Hidden Secrets of Money to understand that. So if you haven't, please do it. Get a bowl of popcorn and put it on your big screen TV. And while you're at it, watch 9 and 10, because these are episodes that I'm very, very proud of. That is like a bowl of popcorn, kick back on the couch, have a beer with it while you're at it, or a glass of wine. On the radar, Lightning Koala says, he just points out this, this page of the London Times says, Chancellor on the brink of second bailout for banks. Now, the genesis block of Bitcoin, nobody knows who Satoshi Nakamoto was or if it's a group of people. He anonymously created Bitcoin and just released it into the wild, put it up on the internet, and it has propagated, and it's being run. The blockchain is being run on mining rigs. They're called computers that try to guess a number very, very fast. But this page, he references this page in the Genesis, very first block of Bitcoin, and it says, Chancellor on the brink of second bailout for banks, on that very first page. And then yesterday, I think it was, we covered this, Bank of England to directly finance UK's government's extra spending. So these things are very, very related. This is the London Times. This is the Financial Times. So I want to thank Lightning Koala. And then Eric Savix says Cantillon Effect. He's actually misspelled this. It's very, very common. I did it, and because of my dyslexia, I read this incorrectly for a long time before I was corrected. It's actually the Cantillon Effect. There is no I here. Cantillon. And in 1755, Richard Cantillon he identified that when you create currency, it doesn't go wherever it's spent first. That portion of the economy gets warped, and it causes prices to rise in certain areas. So basically, he was the first one to identify currency creation as causing bubbles. He didn't label it that. But look at this television screen. More than 16 million Americans have lost jobs in 3 weeks on the same screen at the same time, with the Dow's best week ever since 1938. I mean, the best week since 1938. This is, the Cantillon Effect happening. This is one of the worst times in the United States, and the stock market has its best week. But what's even scarier is this guy, Jim Cramer. More people have lost currency due to him than probably anything else that I know. Chart of the day. This is from Chris C. And what he points out here, he made this chart and he was responding to me. Thank you, Chris. Basically, measured in Venezuelan bolivars over the last 5 years, gold has gone up 178,500%. I just round because gold and silver, the spot prices change every minute. So this is different from whenever he made it. And so it's very interesting. What is also interesting is if you flip this upside down, basically what you've got is the value of the Venezuelan bolivar crashing against gold. We haven't taken this and divided it by the Venezuelan Stock Exchange, the Caracas Stock Exchange, that index, to see if stocks are outperforming gold in Venezuela or if gold is outperforming stocks. But I have a feeling that stocks are actually losing value compared to real stuff. I want to welcome the 943 new subscribers since yesterday. And make sure you hit that thumbs up button, and please post these things on Facebook and Twitter. It really does help. And I have to grow this thing before the end of this crisis, because it's going to end with countries all over the world turning very socialistic. You can just see it coming. And that is a big danger. Viewer feedback. This is from yesterday's video. Zendar says, "A fool knows the price of everything and the value of nothing." That's quoting Oscar Wilde. You know what's interesting is this quote is in my 3 books that are being written right now. All 3 of them have this quote in them. Gamano says, "Modern monetary theory is not modern." So this could be modern monetary theory or the Mugabe Maduro theory, or you could call it the magic money tree, is not modern. It's been tried many times in the past and failed. Governments have been debasing their currency since the beginning of time. Well, actually, watch episode 2 of Hidden Secrets of Money. The first time that money was debased into currency and real money, gold and silver, had a price measured in currency, happened during the deficit spending that Athens was doing for the end of the Peloponnesian Wars. The final few years of that war, they started taking in their gold and silver coins in taxes, and when they would melt them down, they could melt them down and then add base metals to it. So if you add 50% copper into your gold and 50% copper into your silver, you can take in 1,000 coins in taxes and then spend 2,000 coins, and that's deficit spending. And it first happened in ancient Athens, somewhere between 414 and 404 BC. So that it hasn't been since the beginning of time. It's been since the BC era, about 400 BC. Dragonfly Doji says, "Mike, remember when you did those timelines and put a nail in them to show how we were getting closer and closer together? What you're talking about here is I had a presentation called The Death of the Global Dollar Standard. And these were the nails in the coffin of the global dollar standard. And it was the frequency of the news, little things that would come out in the news that were showing that we were getting near the end of this global monetary system. And they were coming, it started with Saddam Hussein announcing that he was going to sell oil for euros. And then it started coming faster and faster. And it took about 3 minutes to get through the first 5 years of nails in the coffin. Now it would take hours to go through just what happened in the last week. And so I abandoned doing that presentation. We did a couple of updates, but it's so hard to update it because there's so many nails. And we are going into a new monetary system sometime soon, and it's probably going to have to do with digital central bank currencies, because there's central banks are all talking about this right now as we speak. So the quote of the day is coming up, but I want to remind everybody again, get my book, it's free. Underlying most arguments against the free market is a lack of belief in freedom itself, and that is so true. I want to thank Milton Friedman one more time. I've got a huge collection of Milton Friedman quotes also. It's like, 6 or 8 pages of just Milton Friedman quotes in a separate document. So I want to thank you for watching, and we'll see you next time.